Um, do you see any other sector that you're more bullish on than uranium at the moment?
Not that I'm, well, one exception is very, very, very tough to play. That is water. I've been a water investor for 35 years. My joke has always been, from a financial point of view, however, water is illiquid. Finding the right investment vehicle to participate in water has been a challenge. You have to buy the agricultural companies that have water as a byproduct of farming. Owning water rights, which is something I've done for a very long time, in areas where water is scarce, where you can sell it for a decent price, and there's some rule of law around water sales, has been a very good business. But that game's effectively over. Any water rights that I know of in Texas, Wyoming, Nevada, California, Arizona, that could be bought have been bought. But you asked the question, so I gave you an answer. In terms of publicly available things, I would point to North American natural gas, either Canadian or American. The byproduct of the shale boom has been that there's a lot of byproduct gas produced as people are producing oil or liquids, and that gas is flooded in the market and depressed gas prices fairly substantially, to the point where standalone gas wells are very seldom profitable. What has happened there is another stealth bull market, though, a bull market in gathering infrastructure, a bull market in storage, and a bull market in natural gas liquefaction. We are building right now a continent-wide infrastructure that will support a profitable natural gas industry for 50 years. And it's available at prices that suggest that natural gas is going to go out of business in the way that Mr. Biden would like to see it go out of business in 2032, which ain't going to happen.
Yeah. Another thing I wanted to bring up here, kind of ask you, both coal and nat gas have seen huge declines ever since the winter, this past winter, just due to the fact that we had like a 3 standard deviation, very anomalous winter. That brought the price of nat gas down 80%. Coal's down very similar. But what's interesting, if you look at some of these nat gas producers, although they've come down a bit, it's nowhere near close to like the 80% drawdown. I mean, you look at some of these nat gas companies. Why do you think that is?
Well, I think you need to look at the fact that the net gas prices soared briefly with the aftermath of the Russian invasion of Ukraine. In other words, they are down from a peak. If you look at natural gas prices around a decade, you sort of factor out that high. And in that sense, I think what you'll see is that normalized natural gas prices have come down, really more reflective of the shale boom than anything else. I think many people perhaps are seeing that the stage is set for a rebound in gas prices, natural gas prices, because of, as an example, government-imposed restrictions on access to capital. The political class is actively talking down making finance available for fossil fuels, as raising the cost of capital for small companies. By the way, one of the reasons I'm starting a new bank is the idea that I could return to conventional energy lending, which is the business I grew up in. At this stage in my career, is my fondest dream. I never believed at this stage that an industry as attractive and mature as American and Canadian oil and gas would any longer hold any opportunity for a mortal like myself. But with the biggest financial services in the firm in the world abandoning energy finance, there's actually room for an old guy like me. I joke, even a fat old bald 70-year-old guy like me can win the 100-yard dash if I'm the only guy that shows up to run. And while this is a benefit to me, this constraint on capital hampers companies' ability to produce in a 3 or 4 year time frame. And so ironically, the best supporter of natural gas and oil pricing going forward are Greta Thunberg, Angela Merkel, Justin Trudeau, and Joe Biden. I find that highly amusing and highly ironic. The idea that I'm being subsidized by these morons just kills me.
Yeah. So the cost of capital is going up. We're sitting at something like 5.5% Fed funds rate. Contrary to what many people think, I've looked at this on my channel. Whenever the Fed funds rate goes up, you typically see commodities go up with it. And one thing that I like to point out is, well, when you raise the Fed funds rate, it makes it the cost of capital even harder to fund these exploration, development, these producers. So, with that said, are these will interest rates cause more inflation down the line? Like, is Powell raising rates going to inadvertently cause more inflation down the line?
I don't think so, but the truth is, I have to hasten to add, I'm not an economist. I'm a credit analyst and a speculator. I lived through this before. In the decade of the 70s, commodities prices increased and interest rates increased. They both increased, I'm going to suggest. Well, in the case of commodity prices, some of it was due simply to shortages. But I think the increase in interest rate is due to inflation. I think over time, if they were to allow a free market in interest rates, which they never will, that you would see a quicker, although a more brutal taming of inflation via the cost of capital. But that's only a conjecture. We'll never see it because the voters, and hence the political class, will never allow it. But I think on the face of it, some aspect of higher commodity prices, which is to say higher nominal rather than real prices, is a function of the same inflation that is giving rise to higher interest rates. Many people think that the Fed themselves set interest rates. In the back of the big thinkers' minds is the concept that occurred or came close to being reality in the Clinton years, which is if they gave a Fed auction and nobody came, their greatest fear is the sort of liquidity pandemonium that would ensue from a failed Fed auction. So while we all believe that Yellen and that crew of clowns ultimately sets interest rates, they influence interest rates. Their job is to stabilize interest rates to the extent they can relative to the policy constraints, including their own need for capital that they operate under. I remember that President Clinton said if he died, he wanted to be reincarnated as the bond market, because the bond market was the most powerful entity known to humankind. And we've forgotten about the power of the bond market. I myself, it's very difficult for me to understand why anybody would buy a 10-year treasury, given the arithmetic around it. 6 months treasury, yeah, I kind of get that. But for me, I actually believe that markets work. They're messy. They don't work the way we would like them to work. They certainly don't work the way the political class would like them to work. But markets actually do work. During periods of scarcity, price goes up, which moderates demand and increases supply. People have arguments with the way the costs and the benefits are shared through society. I get it. But markets work where nothing else does.
Yeah, one thing I like to point out is that a lot of the criticism towards free market and just like when you find distortions in the free market, there's a lag effect with the market. Like, things aren't always going to be in optimal position, when you want to look at it. But given enough time, the market will course correct.
That is a huge, huge, huge point. After 70 years, I still need to remind myself of that. I look at the strength of the U.S. economy as a consequence of higher interest rates. And I need to remind myself that higher interest rates didn't begin to affect the economy of the United States in the decade of the 70s for 6 years. These punches have delayed impacts. And it's what you just said is of critical importance for people to think about. A sense of history is required when you try to anticipate the impact of policy decisions made today. You won't feel them next week. you'll feel them in 2 years or 3 years or 4 years. That's an absolutely critical point that you made.
Yeah, and it's a point that's often exploited by kind of socialists, trying to make their point where like they find distortions in the market and they harp in on that one thing, but then they neglect the fact to actually run the experiment, further down the line and see realize that the market would self-correct over time because the incentives are changing because of that exact event.
Well, that's very useful for the socialists. They have to measure things in the short term, because in the long term, they're the most destructive humans on the planet. The track record of socialism and central control is absolutely unblemished by success. Whether you call it communism or whether you call it fascism, state control of the economy, state control of individuals over time doesn't work. So they have to measure it in the short term.
Yeah, it's all predicated on short-term thinking. Yeah,
in the long term, they have 100% track record of failure.
Yeah. So let's pivot over to geopolitics for a second here. BRICS this past week introducing a couple new members into the fold: Saudi Arabia, UAE, Iran, Argentina, Egypt. And amongst that list of that cohort, you've got Saudi, UAE, and Iran, some of the biggest oil producers in the world. If you look at the entire BRICS lineup, it accounts for 70% of all of oil production around the globe. Compare that to the G7, you've got the US and Canada, which amounts to about 30%. So how does this kind of asymmetry, what does this mean for the oil market currently, with oil sitting at $80 a barrel at the moment?
Nothing.
Okay.
They have 70% of the supply. We have 80% of the demand. There's a market. Yeah. What would happen to Saudi if they withheld supplies?
We would need the price would go up. We would need to find it somewhere.
Who would they sell it to?
That's true.
What would Saudi do?
The biggest buyers are, like you said, the US.
What would the Saudis do without Western demand? I mean, the BRICS.
They'd have a glut of oil.
The BRICS is a wonderful, wonderful, wonderful topic for many reasons. What I see in terms of the current BRICS grouping is two things: the Chinese attempt to break American hegemony and participate, and I think that they would be completely unsuccessful, except for the efforts of the United States. The idea that the enemy of US dollar hegemony as a reserve currency originates in Moscow or Beijing or Riyadh is stupid. The only enemy that the US dollar has is in Washington. On the one hand, we've devalued US Treasury securities by wrecking the credit quality of the country and holding the interest rate down below the purchasing power degradation of the dollar, which is to say, we've made US Treasury securities the deepest and most liquid financial market in the world. We've devalued those securities at the same time that we've weaponized the currency. The SWIFT banking system isn't ours. And the idea that the Russians had trusted us enough to buy $300 billion worth of US Treasury securities, and then we stole them from them because we disagreed with their foreign policy, while it may or may not be admirable, depending on what you have to say about Russia, did one thing to the US dollar. It told people around the world that held US dollars that to the extent that of their own free will, they entered into transactions that the US disliked, that the US would abrogate or default on their obligations to those lenders. BRICS is entirely an understandable reaction around the globe to people who have a poor feeling for US hegemony. Some years ago, I was involved sort of circling the globe, selling fairly sophisticated Sprott products to sovereign wealth funds. And I remember, and I won't name the country, but I went to an Asian country that held about $3 trillion worth of U.S. treasuries. As a U.S. citizen, this was flattering and amusing to me. And after I got to know my counterparty well enough, I said to him, not being politically incorrect, it wasn't him, this is interesting to me. On the face of it, it would seem that you guys send us computers and ships and steel and cars, and we send you back pieces of paper with dreams painted on them. Well, this seems like a good deal to me. I wonder how it seems like a good deal to you when you look at aggregate U.S. debt and the nominal yield, pardon me, the real, not the nominal yield you're getting on the securities. This sort of feels like a lie to me. And my counterparty smiled a little bit and said, I understand what you're saying, Mr. Rule, and what you're saying is true, but yours is a deep and liquid lie, unlike all of the other lies we're being told. And then I asked him point blank, do you trust us? He said, of course not, but we trust you more than we trust each other, meaning the other nations. Doug Casey once said that the U.S. dollar, U.S. bond is I owe you nothing, and a euro bond is a who owes you nothing. With such stalwart credits as South Africa, Russia, and Argentina, the BRICS is a nobody owes you anything. Now, it's being popularized as an emerging currency. It will not be that. These nations will not subsume their national currency or will not forswear their ability to engage in domestic economic activities in favor of a common currency. And the amount of gold they hold, while fairly formidable, isn't sufficient as an anchor to a gold-backed rather than a gold-denominated currency at any rate. I think what they hope to achieve is a settlement mechanism so that to the extent that China enjoys a quarterly trade surplus with Russia, it can settle in some denomination outside the US dollar, at least partly. And so that reserves can be held in a fashion that's more secure for them than U.S. treasuries. And in that regard, I think that the BRICS may be on to putting a dent in the unipolar world that is the U.S. treasury market and the U.S. dollar. But I think way more is made of it. My friends in the hard money movement, when I point out that there isn't enough gold available to secure the currency, chortle with glee, not at this price, but at a higher price. And they sort of assume that a coalition of the lame, the halt, and the blind will bid the gold price up to $10,000 or $12,000 an ounce, which I see as highly unlikely. I think it might go to $10,000 or $12,000 an ounce because of the bankruptcy of the BRICS and the bankruptcy of the United States. But that's a different circumstance.
What about when you compare gold to the money supply? You know, where it was, I guess in the 70s, we had a lot less money circulating.
I think that gold bugs need to understand that, and I am one, by the way, that gold is just another medium of exchange and a store of value. That, by the way, isn't any cause for pessimism. As I understand it from J.P. Morgan Chase, no friend of gold, that the market share of precious metals and precious metals related assets in the United States is 0.5%, which is to say the total value of savings and investment assets in the United States is 0.5% in gold and silver and precious metals related investments. The 4-decade mean is 2%. My belief is this. My belief is that disruptions in the currency markets and the amount of debt and deficit in the U.S. system will cause demand for precious metals related assets to revert to mean. If that happens, I'm not suggesting that the price of gold will ever reflect the amount of currency in circulation. I'm suggesting that gold will go from historically stupidly underowned to mean. If that happens, demand for precious metals and precious metals related assets will increase fourfold, which I think will happen within 5 years. I believe, and I'm trying to figure this out for myself, by the way,
Right.
I believe that the last 4 decades that we've lived through have been, in economic senses, the most benign in human history. And I don't believe that, despite cracks appearing in the facade, that there's very much fear in the world yet. And I think a little bit of fear, maybe even a return to prudence as opposed to fear, would be sufficient to restore precious metals and precious metals related securities into enough favor that they return to a 4-decade mean. JP Morgan Chase doesn't have statistics, but they estimate that the market share of precious metals and precious metals related assets in 1981, the sort of apogee, was about 6%. If we ever had a circumstance where the level of fear that we experienced as a society was consistent with what happened in the decade of the 70s, and I'm not saying that's going to happen, but if we ever did, then you would have a circumstance where the market share of precious metals and precious metals related assets went up 10-fold or 12-fold. Don't bank on it, but consider it a possibility.
Fascinating. Well, Rick, we're closing in on time. I want to give you enough time to kind of tell us where we can find you and tell us about your ranking service as well.
If you care about what I have to say about natural resources, and by the way, I do better on the micro than the macro. I just talk about the macro because it's interesting. I want to give your listeners an incentive to do that. Go to my website, ruleinvestmentmedia.com. List your natural resource stocks. Please no crypto. Please no pot stocks. Please no tech stocks. And I'll rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues if I think my comment on those issues might have any value. There's no cost to this. There's no obligation. Once again, ruleinvestmentmedia.com. Note that I'm celebrating retirement by starting a new bank, Battle Bank, a bank where, as an example, we will lend against physical precious metals holdings. A bank where you can have a money market account or a CD in 22 currencies, not just the US dollar. A bank where your IRA can own single family or multifamily real estate that you operate legally. If you care about a sanity-based bank where they believe that your money is in fact your money, in the question and comment section at Rule Investment Media, at the rankings page, simply write bank, and we will give you more information about Battle Bank, which is currently in organization. Once again, ruleinvestmentmedia.com. I'll rank your stocks, and if you are not happy with your current bank, which I suspect means all of your listeners, write bank in the question and comment section.
Excellent. Well, we will have those links in the description down below, so be sure to check out there, guys, if you're interested with what Rick has to offer. I actually have one stock, if you don't mind doing one on the spot for your ranking. Sure. Global Atomic.
Global Atomic, I've suspended from rankings because I'm not smart enough to understand the near-term impact of what's happening politically in Niger. I've been in touch with the Romans, and mercifully, at present, their part of Niger is fairly calm. The Nigerian authorities have said that life could and should go on. I'm not a political analyst. I had Global Atomic at a 5. I like the grade. Niger was a country that hadn't come to grips with uranium production that wasn't in French control. So the political, economic, and legal protocols around both GOVIEX and General Atomic were ones where I wanted to see fiscal protocols established so that I could comment on them.
So is a 5 good or bad?
A 5 is, I own a lot of 5s. 1 is best, 10 is worst. So 5 is right in the middle. Note that among junior mining companies, my median ranking is sort of 6.5 or 7. I consider most of them to be unownable. I regarded General Atomic as ownable, but now I've suspended both it and GOVIEX because I'm not smart enough to understand the political ramifications of what's happening there.
Gotcha. Well, it's worth a shot.
Sure.
Well, guys, if you enjoyed this content, like I said earlier, be sure to hit the subscribe button, comment down below, like the video, share it, do all the fun stuff, and I will see you in the next episode. Bye, y'all.
that is water. I've been a water investor for 35 years. My joke has always been, from a financial point of view, however, water is illiquid. Finding the right investment vehicle to participate in water has been a challenge. You have to buy the agricultural companies that have water as a byproduct of farming. Owning water rights, which is something I've done for a very long time, in areas where water is scarce, where you can sell it for a decent price, and there's some rule of law around water sales, has been a very good business. But that game's effectively over. Any water rights that I know of in Texas, Wyoming,